The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Andy Duncan, keeping you up to date with expert opinion on precious metals and the markets.
Hello and welcome to this Gold Money Podcast. Today on the 15th of January, I'm speaking to Doug Casey, the founder and chairman of Casey Research and the best-selling author of Crisis Investing amongst several books, including his latest book, Totally Incorrect, which is available on all good Amazon sites as we speak. Hello, Doug.
Andy, it's a pleasure to be talking to you. I'm in Washington, D.C., the very heart of the beast.
Absolutely the heart of the beast. Whereas most mainstream media's outlets continually see green shoots of recovery everywhere, if only they would print more money and wait more time, you think that we're in the eye of a financial hurricane. How long do you think it is before we leave the eye of this hurricane? And then once we enter this trailing edge of this storm, how long do you think this storm's going to last?
Well, we entered the hurricane in late 2007, really. Lasted 2008, 2009. Then they printed up trillions of currency units, not just the Americans, but all these governments all over the world. And that's pretty well papered things over because the banks didn't collapse, the brokerage firms didn't collapse. So things have looked good. It's given the appearancy of prosperity for the last several years. The problem is this, that these trillions of currency units, most of them are just sitting in the banks. And that's a good thing because they're not circulating in the economy. But at some point, they're going to start circulating in the economy. And inflation, which is actually running far above the government's official figure of 2%, is going to explode to very high levels. So that's the prediction of what's going to happen. Now, it's always dangerous to predict both what and when. I'll say that it's going to be this year. I'm just surprised that it didn't happen last year or even in 2011. They've been more successful than I would have imagined, actually.
Well, 2013 is bound to be unlucky for somebody. How do you think they've actually managed to keep it going this long since 1971? All paper monies have collapsed in history. This one seems to have been going quite a long time. How have they managed to keep it going?
Well, one reason, of course, is that the dollar is used as the world's currency. Most commodities are priced in dollars, certainly including oil, and it's therefore settled in dollars. So that gives people a reason to hold dollars. Also, the dollar is used officially in 4 or 5 countries around the world as the national currency: Panama, Ecuador, Liberia, a couple other countries, but it's used as the de facto currency in 50 more. Well, Argentina, where I spend a lot of time, nobody wants to deal in the peso. They will use dollars. The fact that it's accepted everywhere has made it possible for the U.S. to export to date. Nobody knows the real number, but I think it's probably something in there. There's 7 or 8 trillion U.S. dollars that are outside the U.S. So that's the reason for its success. If the dollar was just an ordinary national currency used only within the United States, we'd already be experiencing catastrophic levels of inflation, I think. Well, the whole thing would have collapsed.
And do you have any triggers in mind for how this $3 or $4, $5 trillion is going to repatriate itself back into the United States?
Well, that's a good question. You know, one thing that establishment economists, and I hate to call them economists because they're not economists, they're political apologists. I mean, economists are people that describe the way the world works, and these people prescribe the way they think the world ought to work, and then tell politicians what they think they ought to impose upon society. But I lost my train of thought. So these so-called economists like to say that psychology is very important for the dollar and for the economy. Now, I would say that psychology is totally unimportant because psychology can blow away like a pile of feathers in a hurricane. But when it comes to the dollar, people's psychological attitude actually is critically important because all the non-Americans that hold these $7 trillion outside the U.S., those dollars don't have to be used, don't have to be accepted outside the U.S. In the U.S., it's law you have to accept dollars, but there's no law that says that the Chinese have to accept dollars if the Russians want to give them to them. So at some point, these people are going to realize that they're sitting on a live hand grenade. They're handling a bunch of old maid cards, and there's going to be a panic to the exits. And those dollars will repatriate to the U.S. And I think this is a critical point to make, Andy. It's that the standard of living of people in the U.S. has been much higher than it should have been for the last 40 years because the U.S. has successfully exported dollars, and the foreigners have given us all kinds of good things, Mercedes and Sonys and cocaine and coffee, and taken these dollars. But at some point, if they lose confidence in the dollars, those dollars are going to come back home in exchange for the title to American companies and U.S. real estate and Boeings and IBMs. And all those dollars coming back into the country are going to greatly increase the money supply and explode reported levels of inflation. So that's what we're looking at, among other things. But there are other things, too.
Now, we've seen increasing deals, such as between Iran and India swapping gold for oil. And we're also seeing lots of kind of currency swaps starting between China and Russia, India and China, and so on. Now, the central banking cartel must have an end game in mind for the current situation. Do you think they really believe in Keynesianism? And if they do, all of these central banks, what are they expecting to happen?
Well, they do believe in Keynesianism as an economic way of thinking. Of course, it's not. But these people are dyed-in-the-wool statists. They're dyed-in-the-wool collectivists. So I think that they actually believe the things that they tell other people. But at the same time, they're actually not all that stupid. Well, we have to define stupidity. They have high IQs by standard testing methods, but if you define stupidity as the ability to predict the consequences of actions, they're actually kind of stupid. Or if you define stupidity as an unwitting tendency to self-destruction, which is another good definition of the word, they really are kind of stupid. So I think what's happening is that the central banks, notwithstanding these things I've just said, all around the world, outside of Europe and North America, of course, are buying gold. And it's simple, because what can they hold? What can these central banks, which ought to be abolished anyway, but that's a different question, what can they hold as assets? Well, right now they're holding other countries' currencies, mostly U.S. dollars. But they're starting to see that the U.S. dollar is just the unsecured liability of a bankrupt government. So they're trading those dollars for gold. I think gold is going much higher.
We are starting to see this breakdown in the trust between various central banks. If what's been reported is correct, the German newspaper Handelsblatt reported that yesterday the Bundesbank has decided to do a complete about-turn on its policy and is going to repatriate more than 3,000 tons of gold back into Germany for who knows what reason. Do you think this is significant? And if you do, what do you think are the repercussions of this?
Well, I don't know the actual reason the Germans are repatriating the gold. The reason that I've read that they're giving is that gold was put in Paris and New York and London because after World War II, the situation was unstable with East Germany and the Russians and so forth, so they didn't want to have it all in Germany. That made perfectly good sense, and they're repatriating it now because things are stable. Okay, well, that's a good reason. But maybe they're repatriating it because they don't trust the other foreign banks, which is even more likely at this point. Incidentally, I've got to say, in phrasing that question, people have gotten into the habit of denominating gold in tons. And I find this very troubling because most people don't know the difference between short tons or English tons and metric tons to start with. And gold isn't priced in tons. It's priced in ounces. It's not dealt in tons. It's dealt in ounces. So I always like to refer to it in ounces. I think this conceit has happened partially because there's some people that really want to confuse people as much as possible about what gold is worth, how much there is, and make it irrelevant, because nobody can buy a ton of gold. I mean, that's, 32,150 ounces, if I recall the number correctly.
We can't predict when the storm's going to end, but how do you think it's going to end? Do you think there's going to be a kind of new Bretton Woods-style conference in which all the G20 get together and maybe create a new world dollar or a new SDR or something? And if they do this, do they have to base this new world currency on gold, or are they just going to confiscate as much gold as they can lay their hands on from everybody else?
That is the so-called $64 question. On the one hand, all of these governments all over the world, and there are no exceptions to this statement I'm about to make, are becoming extremely virulent. They're grasping more and more power and more taxes to themselves at the very time that they're totally bankrupt. So that could happen. On the other hand, maybe there's going to be a complete economic collapse. I think there will be, actually. And at that point, none of these governments, they can agree as they'd like, but they're not going to accept each other's currencies. They don't trust each other enough. So what are they going to trade with if they don't accept each other's paper? Well, they're probably going to go to gold. So there's a number of possibilities. Sure, they might try to have some kind of a new SDR or a new truly international euro/dollar/yen substitute. That's possible. It's idiotic, but it's possible. I think the odds are better that we're moving into a time of conflagration. I think that the odds of some serious wars coming up, I'm not just talking about sport wars, such as we had in Afghanistan and Iraq, but real wars are going to preclude that possibility. So the answer to the question, it won't be by international agreement. I think people will just start using gold again.
In a time of international problems, what do you think the best things our gold money listeners can do to protect themselves from your Greater Depression or even worse things?
Mm-hmm. Well, I'm a big believer in gold money, and I promote it. Of course, I'm a small shareholder in it, so I must disclose that. But that's got nothing to do with the fact that I really believe in it. That's why I bought into it years ago. So I think that they ought to increase their gold money accounts, and they should definitely have physical gold in their own possession. And in that case, preferably some outside of their native country, so that you get some political and some geographic diversification in the actual physical metal in addition. So you've got to do all these things when it comes to gold. But it's interesting because almost nobody in the world owns gold today. I mean, if we talk about Americans, 1 out of 1,000 perhaps owns more than just a souvenir gold coin. That's all I'd say it is. Same with the average Brit, 1 out of 1,000. So nobody owns gold at the moment. It's in the you'll find out department for most people.
At a recent Libertopia conference, you said that you thought Singapore was the best place in the world to store gold money, or gold. So you must have been pleased when Gold Money announced their Singapore vault.
Yeah, I was. It's actually, Singapore impresses me as the most secure location in the world for holding gold. I mean, Switzerland is still okay. I don't have any confidence at all in any place in the U.S. or the U.K. Switzerland will work, but they've been caving in to the U.S. government and so much in recent years. It's amazing. They held out against the Nazis for 5 years, totally surrounded by the Nazis, and they held out, but they're caving into the U.S. government. It's quite amazing. Singapore is better because the Orientals essentially and increasingly hold the Europeans and Americans in disdain, almost disregard, and they're not going to take any nonsense from the West. So, and Singapore is doing well economically. Yes, that would be my first choice, Singapore.
I always love that story about the Second World War in which a German general met a Swiss general at a kind of border meeting, and the German general said, "You must surrender, we have twice as many men." And the Swiss general said, "Yes, all my men will have to shoot twice."
I hadn't heard that one. That's good.
That was a great. I think it was actually true, something very like that. Now let's move on more to ideas rather than money and so on. The Keynesians and all their kind of ilk seem very drawn not just to the wrong things, but in your words, the very opposite of the right things. Now we see this with Paul Krugman's support for trillion-dollar platinum coins and so on. Now, moving into the future, how do you think we can shake off these Keynesian nostrums of printing money, generating wealth, making bread from stones? How can we move the world towards believing in sound money and taking this 1 in 1,000 Brits and 1 in 1,000 Americans and getting them to be 1 in 1 Brits and 1 in 1 Americans who buys gold?
Well, I have pondered that question, and I can give you a couple of possible answers. One is, one law that I believe in is Pareto's law, which is the 80-20 rule. And there are many variations of it, of course, but one variation that I think is correct and applicable is that 80% of people are basically decent, get along, go along types of goodwill. Therefore, that being the case, 80% of people, given a correct argument, should accept it, and therefore 80% of people in the world should be free marketeers. Now, that's the optimistic outcome, the optimistic possibility. But there's another possibility, and that is that all humans, like most things in the world, can be represented on a bell-shaped curve. And libertarians, very free market libertarians, are way out on one end of the shoulder. We're just a tiny, tiny, tiny percentage. And it's almost like if you're a libertarian, you're a genetic freak. And if that's the case, we're foreordained to failure. Maybe because of hundreds of thousands of years of the way humans have grown up, we are beasts that like to work in the collective, that think in the collective, that have been corrupted by it, that are anti-rational in that way. So those are my arguments, the happy scenario and the gloomy scenario. But speaking for myself, I promote the free market and I promote libertarianism on every occasion and all occasions. Not so much because I think it's going to change anybody's mind or change the world, but because I think it's the right thing to do, and it amuses me, and I do things that interest and divert me.
Call me an impossible dreamer, but what I'm hoping for when Keynesianism does collapse is that we can move towards private monies, sort of in the mode of Neil Stephenson's Snow Crash and Diamond Age. I was wondering what your speculations were on what private monies might look like in a possible, though I'll admit unlikely, future world, without the monetary constraints and interference of government. What would a world look like, a monetary world look like, without government fiat monies?
Well, I agree with Aristotle's definition of good money. It has to be durable, divisible, convenient, consistent, and have value of itself. And as far as I know or can determine, gold fits those 5 characteristics far better than any other entity, certainly any other of the 92 naturally occurring elements, and far better than paper does. So I think that we're going to go back to gold. Gold is peculiarly good for use as money, much as iron's peculiarly good for building bridges, and aluminum for airplanes, and uranium for reactors, and copper for electricity. And gold is peculiarly good for money. So I'm very confident that gold will be used in the future. It's not a barbaric metal. It's not a relic of the past. This This is ridiculous. We're talking about physical reality here.
Recently, Gold Money has asked its subscribers about Bitcoin integration. Do you have any opinion on Bitcoin? Because it doesn't sort of fit those 5 things, does it? You can't really see it, or it's not very durable or whatever. It might be in computer terms. But what do you think of Bitcoin?
Well, a couple of reservations. Number one is that, to me, a computer is a tool, and I use it in a very primitive way, to be honest with you. I use it as I might use a hammer. I use it for typing and for emailing, and I don't use any of the sophisticated functions. So perhaps I'm the wrong person to talk to from that point of view, because I'm not a computer expert. But there are problems that I can see with Bitcoin apart from that. Its value has fluctuated quite a bit from, I think they offered it at 25 cents when they started, and it went up to $30. I think it's like $13, I've been told, while we speak. I can see the utility of it, but ultimately, it's the type of thing, notwithstanding the fact that the supply is restricted and so forth, I think you could wind up holding the bag. And there's no reason why there couldn't be 100 more Bitcoins out there that, even if they were exactly like this Bitcoin, Bitcoin B, Bitcoin C, Bitcoin D, all competing with the current Bitcoin, would devalue it. So I wouldn't recommend holding Bitcoin. I mean, it's a good trading sardine, but it's not an eating sardine.
One of my favourite books, Snow Crash by Neil Stephenson, the dominant currency is Mr. Lee's Greater Hong Kong dollars. Are there any other kinds of monies you think could arise, like PayPal monies or file kind of monetary units, besides gold?
Well, gold is just a medium of exchange and a store of value. So it's conceivable that could happen. There's nothing magic that says gold has to be money. And as you're well aware, we've had many kinds of monies in the past. I mean, the word pecuniary comes from the Latin word pecus, meaning cow, because cows were used as money. Salary comes from the Latin word for salt, because salt was used as money. So I don't have any speculations on what possible competing money could arise. So I'm happy to stick with gold. And silver also has the same characteristics as gold, although more characteristics of an industrial metal. And you could say copper does too, although it's much, much more of an industrial metal as opposed to a monetary metal.
I was at a conference recently with Professor Hans Hermann Hoppe, in which he said that he wasn't such a big fan of Bitcoin because he couldn't see it or he couldn't touch it. Now, one of the big ideas of Professor Hoppe is that he thinks the world will or he hopes the world will break down or regress down to very small territories and microstates, such as one of your favourite places, Singapore and Liechtenstein, a world full of Liechtensteins and Monacos and Singapores and so on. Do you think that this is possible and this might happen, or can't you make such a prediction about the future?
I think it's not only possible, but I think it's likely, because I think it's quite interesting what's happening even in Europe. While the Eurocrats have tried to put all the nation states of Europe into one big melange and are trying to tighten that up, at the same time, you've got the Catalans trying to break away from Spain, and the Scots and even the Welsh in England, and the same thing is going on in France. And of course, Russia there's a whole bunch of places other than Chechnya that are problematical like that. In fact, most of these nation states in the world are completely artificial constructs that have no reason, no raison d'etre at all. They were put together, arbitrarily by drawing lines on a map. My ideal, of course, is that we have 7 billion nation states where everybody governs himself and doesn't take orders from anybody. Well, maybe from your wife, but that's as far as I'd go.
One of your best books and one of your biggest selling books was Crisis Investing, and you've just come out with a new book which is totally incorrect, which is just available. Is it you who's totally incorrect from the view of our rulers, or are you describing the rulers of today as totally incorrect?
Yeah, it's kind of a takeoff on that term, politically correct. And that term, politically correct, was coined back in the 80s. And when it was coined, I thought it was a joke. I mean, it's be politically correct. And then people started using it seriously. And it's insinuated itself everywhere throughout society. And like most things that you see in the papers and in the media, on television, it's a corrupting concept. So I'm trying to be totally incorrect as opposed to politically correct.
Yeah, I love the cover where you're smoking a cigar and drinking an alcoholic drink. I just wish you'd slung a rifle over your shoulder as well for full effect. That's
right, but a rifle is heavy and doesn't go with enjoying yourself with a cigar and a whiskey in quite the same way.
And what will people find inside the book? Is it a guide to investing, or what is it?
Well, I cover the waterfront. I talk about everything under the sun, actually. I think I talk about everything from various countries in the world to the game of polo, to the game of poker, to technology, to just about every subject. And of course, there's a lot of stuff in there on investing besides. But what I'm trying to do is overturn the things that everybody automatically assumes. I don't assume anything.
Getting onto your kind of more day job, how can our listeners find out more about Casey Research and the services you can provide for them?
Well, we have a number of free publications. So if they go to caseyresearch.com, log in, and just sign up for them. And I've got to say, our free publications are very, very good. But they are let's say, a lead-in for our paid publications, which get into very specific stuff and timing on stocks and securities and all kinds of things like that. So I'd invite people to go to caseyresearch.com and just take a look, sign up for a few things, free or not free.
And what big areas are you looking at the moment?
Well, I'll tell you what I think, Andy. It's that although gold and silver are not particularly cheap at the moment, they were cheap 10 years ago. In fact, back in 2002, they were cheaper in real terms than they were in 1871, which is rather amazing, actually. I suggest, one thing I suggest is that or don't suggest, but I predict that there will be many bubbles created in the years to come as these trillions of dollars that have been created and will be created in the future, they're going to go into different parts of the economy and create new bubbles, like the real estate bubble, which has blown up. And the stock bubble, stock bubble that blew up in 2001 was another one. Right now, we're in the middle of the biggest bubble in history. And when this bubble bursts, it's going to be a catastrophe for most people because they're moving into bonds right now at the very peak of the market, chasing the trivial yields that are available. So that's one bubble. We're at the top of one right now, so look out for that. But one bubble that I'm looking forward to, actually, and profiting from, there will be others, is gold stocks, especially gold exploration stocks, small mining companies. It's not just a nano cap part of the market, it's a pico cap part of the market, so that when people start moving into these mining stocks for a number of reasons, which they will cyclically, it's going to be like trying to get the contents of Hoover Dam through a garden hose. So I think that fortunes will be made simply because they have a very long history of this. They've moved up 10 to 1, collapsed 95%, moved up 10 for 1 again, collapsed. And it's going to happen again this time. And now, as we speak at this moment, they're about as cheap relative to gold as they've ever been in history.
Yeah, I've never understood this thing with bonds because interest rates are at 0% and interest rates can only go up, and when interest rates go up, bonds go down.
Yes.
I was speaking to Professor Patrick Barron the other day, and he's done a calculation taking the number of dollars in the world and dividing it by the number of gold ounces the American government has, and he came up with a price of $38,000 for an ounce of gold, even if the American government has the amount of gold it says it has. What do you think of that number?
Actually, I did calculations like that for my third book, Crisis Investing for the Rest of the 90s. And yeah, that's quite correct. Of course, there are some variables and some imponderables to doing those calculations. One is governmental action. Maybe they'll, assuming the U.S. government survives in its present form, I mean, nothing is off the table, quite frankly. Maybe they'll just make the dollars convertible if they're held by foreigners abroad. Or maybe if they fail in their efforts to keep inflating, perhaps we'll have massive bank failures, insurance company failures, bond failures, and it'll wipe out trillions and trillions of dollars. So that it's very hard to say. But I don't really care what happens, because whether it's inflation, where it's obvious how gold is a good thing, or deflation, gold can't be defaulted on. There's no counterparty risk in it. So I'm very comfortable with buying and owning gold at $1,650 an ounce or whatever it is right now as we speak, more or less.
Okay then, Doug, I know you've just got off a flight from Buenos Aires, so I'd like to thank you very much for your time today and wish you the very best in the year ahead.
Well, thanks, Andy, and let me return those wishes.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section. The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Andy Duncan, keeping you up to date with expert opinion on precious metals and the markets.
Hello and welcome to this Gold Money Podcast. Today on the 15th of January. I'm speaking to Doug Casey, the founder and chairman of Casey Research and the best-selling author of Crisis Investing, amongst several books, including his latest book, Totally Incorrect, which is available on all good Amazon sites as we speak. Hello, Doug.
Andy, it's a pleasure to be talking to you. I'm in Washington, D.C., the very heart of the beast.
Absolutely the heart of the beast. Whereas most mainstream media's outlets continually see green shoots of recovery everywhere, if only they would print more money and wait more time, you think that we're in the eye of a financial hurricane. How long do you think it is?
Just to predict both what and when. I'll say that it's going to be this year. I'm just surprised that it didn't happen last year or even in 2011. They've been more successful than I would have imagined, actually.
Well, 2013 is bound to be unlucky for somebody. How do you think they've actually managed to keep it going this long since 1971? All paper monies have collapsed in history. This one seems to have been going quite a long time. How have they managed to keep it going?
Well, one reason, of course, is that the dollar is used as the world's currency. Most commodities are priced in dollars, certainly including oil, and it's therefore settled in dollars. So that gives people a reason to hold dollars. Also, the dollar is used officially in 4 or 5 countries around the world as the national currency: Panama, Ecuador, Liberia, a couple other countries. But it's used as the de facto currency in 50 more. Well, Argentina, where I spend a lot of time, nobody wants to deal. So these so-called economists like to say that psychology is very important for the dollar and for the economy. Now, I would say that psychology is totally unimportant because psychology can blow away like a pile of feathers in a hurricane. But when it comes to the dollar, people's psychological attitude actually is critically important, because all the non-Americans that hold these $7 trillion outside the U.S., those dollars don't have to be used, don't have to be accepted outside the U.S. In the U.S., it's the law you have to accept dollars, but there's no law that says that the Chinese have to accept dollars if the Russians want to give them to them. So at some point, these people are going to realize that they're sitting on a live hand grenade. They're they're handling a bunch of old maid cards, and there's going to be a panic to the exits. And those dollars will repatriate to the U.S. And I think this is a critical point to make, Andy. It's that on the peso, they will use dollars. The fact that it's accepted everywhere has made it possible for the U.S. to export to date. Nobody knows the real number, but I think it's probably something in the order of 7 or 8 trillion U.S. dollars that are outside the U.S. So that's the reason for its success. If the dollar was just an ordinary national currency used only within the United States, we'd already be experiencing catastrophic levels of inflation, I think. Well, the whole thing would have collapsed.
And do you have any triggers in mind for how this $3 or $4 or $5 trillion is going to repatriate itself back into the United States?
Well, that's a good question. One thing that establishment economists, and I hate to call them economists because they're not economists, they're political apologists. I mean, economists are people that describe the way the world works, and these people prescribe the way they think the world ought to work, and then tell politicians what they think they ought to impose upon society. But I lost my train of thought.
Before we leave the eye of this hurricane, and then once we enter this trailing edge of this storm, how long do you think this storm's going to last?
Well, we entered the hurricane in late 2007, really. Lasted 2008, 2009. Then they printed up trillions of currency units, not just the Americans, but all these governments all over the world. And that's pretty well papered things over because the banks didn't collapse, the brokerage firms didn't collapse. So things have looked good. It's given the appearancy of prosperity for the last several years. The problem is this, that these trillions of currency units, most of them are just sitting in the banks. And that's a good thing because they're not circulating in the economy. But at some point, they're going to start circulating in the economy. And inflation, which is actually running far above the government's official figure of 2%, is going to explode to very high levels. So that's the prediction of what's going to happen. Now, it's always dangerous